Hello, my name is Michael Glass from emini-trading-coach.com, where we focus on high probability trading setups. Before we begin, we're going to talk about our disclosures. Any symbols you see today should not be inferred as a trader recommendation, no matter what type of investing you use, stock, forex, or futures. You can lose your money. You want to make sure that risk is suitable with who you are as a trader. Any strategy we choose today is hypothetical. Future results are not guaranteed. And any investment decision you make is on your responsibility. Trade at your own risk. So we're going to go ahead and look at the week that was. It's Saturday, February 5th, 2011. And we had the market bounce right on back off of the last Friday. We had the turmoil over in Egypt, and the market kind of fell a little hard, and people wanted to know if it was technical or if it was geopolitical. And as we look, we can see that the market has roared back 2.7% this week. All major sectors rose, and this week, of all the companies reporting, over 70% topped those estimates. And so that concern that we had over Egypt, although it is continuing on for the whole week, as far as business goes, it's been shrugged off. Verizon began selling their iPhone this week, and it set records for Verizon. It's still not open to the public, but existing Verizon folks could pre-order their iPhones. And then we had Friday, which was the non-farm payroll numbers, and the jobs for January only increased 36,000 when they were expecting 148,000, but on the other side, unemployment dropped to 9%. So it was very mixed, and in the end of the day, it was, we ended up for today, but it was very whippy for the first couple hours of trade yesterday. And we did have retailers this week post better than expected monthly sales. And so what that basically brings us to is what's going to happen next week. And there's no real earnings next week, and there's really no economics. You might say Michigan sentiment on Friday, but there's no major catalyst coming up this week. So we're obviously in an uptrend. Continue to buy the dip. Confirmation is we've been talking about this 1312 level, so we need to go ahead and close above there. We had this line drawn for a while, and we just kind of rose ourselves right above it. So that's going to be our resistance support right around 1275. That's where we bottom out. We got the 10 and the 20 exponential moving average acting as support. And again, we want to stay above this 1300 psychological barrier so we can move higher. Otherwise, we may fall back. But let's pull up a chart and take a look. So here we are looking at our daily chart of the S&P 500. You can see this beautiful uptrend from August, even better from November. And we thought we were going to get a little consolidation here starting last week, and we just went ahead and bounced right off our line and moved right back up. The so-called concerns of Egypt did not continue us down, and the market rallied right off of that and kept going. So you can see Monday, Tuesday, Wednesday, Thursday, Friday, and we just below where our resistance area that we've been targeting around 1312, 1313. You can see our indicators continue to be in the overbought, and this is a perfect lesson for you to see. Come all the way back here to November, and we really got into overbought levels here in December, and we basically have stayed there for 2 months. So, being an overbought level does not mean we can't stay in overbought levels for a while. We can stay there forever. Look at the MACD staying up here the whole time. Same thing with RSI in an overbought all the way back here. So we can stay overbought for a while. Doesn't mean that we're going to immediately flip right back around. Now, when we scale out and look at the weekly, still seeing the same thing. We touched over bot and came out of there, and we're doing the same thing here. We're going to double top. So I am still cautiously bullish. Can we go higher? Sure. The market doesn't seem like it wants to go down, but you do have to be careful. And the rule number one, as we said, buy the dips. Until proven wrong, buy the dips. So on the weekly, we came down to the 10, went up. We almost got to the 10 and moved up. So certainly want to buy the dips. Scrolling out even longer to the monthly, we can see once again all of our indicators are just about in an overbought. RSI has a little bit more to go. MACD has a little bit more to go. So we may get a little bit more. And again, if we can stay above 1300 and stay above this 1310, 1312 level, we can go higher. Higher where? Well, you can see right in here around 1350, 1360. Let's change our indicator and match up these wicks right in here. That's kind of where we're looking at if we continue to move higher and if we break above the current price level. So cautiously bullish, cautiously bullish. Okay, as we move on to the education portion of our video, we're using the book Trade Your Way to Financial Freedom by Dr. Van Start. And we've been talking for the past month or so about setup. So we're just kind of summarizing what we talked about the past month. And the main point that he makes here in the book is that people spend so much time looking for setups. I was talking to someone just the other day about Forex, and he had a moving average crossover setup. And what I told him, and what I've been telling him as he's been getting his study, is that people spend so much time, and there's a gazillion setups out there. There's a gazillion systems out there, and we all have our biases over which ones are better, but they're all out there, and they all work. That's not the problem. The problem is your belief, your psychological capital in that system. Do you believe it's actually going to work? And will you trade it faithfully? So, people spend so much time about, what's the best setup? A breakout strategy, a technical indicator, crossover indicator, a volume indicator. But in the end, are you still going to pull the trigger when those events happen? So, it's important to have a setup, but there's so many other things you have to work on in order to be a consistent trader. He talks about 4 components of the market: market selection, market direction, the setup, and then the timing. We look at it as first determine the market direction, then find good locations to trade, then have a trigger once we get there, and then manage the trade. So our 4 components are direction, location, trigger, and management. And one thing that he talks so much about in this chapter was that, hindsight is a billionaire, and that is people can pull up charts and pull up indicators and get an indicator to say when these things happened in the past, this works 100% of the time. But the practicality when you apply it to today's market doesn't work so much. So, again, we have to consistently look at today's market. That's why we have to understand what the direction is. That's why in our video about high probability trading setups, it's so important to understand context and then find setups that meet that context. So, we're on Facebook, Twitter, and YouTube. On Twitter, we're emini-coach. Facebook and YouTube, we're emini-trading-coach. And we just talked about, we do have our free 5-part video on high probability trading setup. So we've broken it down into nice 5 videos that help you understand how to put together a high probability trading setup. And that's hopefully an introduction to our instructional video series for $250. Notice not $1,500, $3,000. We're not trying to milk you on some strategies, some videos that other traders and gurus are out there, because the problem is you watch these videos and you still don't know what to do, or you know what to do but you still don't have the capital to do it. And that's where our coaching, where we work with you one-on-one, hold your hand and get you to understand and build that psychological capital that you need to be a successful trader. We got a great relationship with Global Futures, 20 free trades. They've got all the platforms. They got competitor rates. Give them a look. And then finally, we got a new video series out there, Your Forex Trading Resource, where we're putting together the same type of videos and same type of instruction and leadership on Forex. So give that a shot. But remember, it doesn't make a difference what you buy, what you read, what you're honing in, if in the end of the day you don't pull the trigger. It's not just a setup. It's not just an indicator. It's a being. It's a mindset. And until you have the trader's mindset, you're not going to be profitable on a consistent basis. Thanks, guys, and I'll see you next time.